All right, so we'll start off with BTC. Who is actually fucking trading this garbage? Who is trading this garbage? It's so bad. It's such trash. BTC is just the lowest of the low right now. I don't want to start off this stream by being too aggressive, but holy shit, please stop trading this. It's so bad. It's just, there's no strength. There's nothing here at all. Everything else is like popping off, doing various things, but like, what are you doing here? Just go play like SHIB or fucking doge, you know? But anyway, the 4-hour picture I think is really, really interesting on BTC. So we keep on pushing against the highs. We can see from a kind of a higher time frame perspective, we've been struggling around 24,000. We got the breakthrough. We dipped back underneath again, which has been classic to BTC, especially in this region here, as well as the 21.5s. Like this dip down below the former level. So we basically just did the same thing again here. Here's the level. We dip down underneath and then trying to make a move, to actually get some impulse above here. But for now, it's just garbage. It just really is trash. The 4-hour is interesting because it is actually diverging over here, which is a really poor area to diverge in. Like this, I haven't seen divergences occurring this week in a long time. Right, the fact that like the RSI is even showing lower high peaks here. Yes, we've got the RSI 50 touches, but the AO supports the thought process. So the fact that we've got the two highs here that are both diverging is quite an unusual scenario to kind of show weakness in this area of the chart. For me, it's a really poor look for BTC. A really poor look. I think that if BTC starts to impulse the upside and actually manages to hold some sort of period of greater than 48 hours maintaining green, then I think the catch-up play that everybody is discussing and that I would happily tag along with is the play to make. Until that point happens, I think you should just focus all of your energy on playing alts. There's really nothing, about this that should have any interest for people on, kind of like low to mid time frames. It's garbage. And to be sitting there holding on to this is also, not great. 3-day picture, still basically doing the same thing. I think we map this out every time that we come onto stream at the moment. It's just in this channel over here. And still no signs that the channel is going to break. If we break the upside, then we're just targeting 28.5. That's pretty clear trade that we would be taking here. It's a complete gap down here, so we would be looking for the 28k level, which is the trade that everybody wants, but I still think is the correct trade to be making. So regardless of it being the very common trade, I still think it's the correct one. But for now, just failing here. RSI coming all the way back up to the 50 level here on the 3-day, about to get the crossover, but we don't know what that's going to look like, and then hopefully send it lower again. So BTC I think is just in a pretty poor position overall. And then we'll go to ETH, and I really like ETH still, obviously. It's a great looking chart. The strength is really good, and we've broken clear of the trend lines that have been kind of acting as resistance on the way up. We've broken clear of that for now. The concern at this point in time is whether or not this is going to be kind of an overthrow scenario. And I suspect that if BTC starts breaking down or something affects the market, that this is a pretty nasty setup for ETH. However, at this point in time, ETH still looks obviously astronomically better than BTC. The strength is very clear on ETH's side. Again, this looks as though it is basically heading to 2200. That's in kind of simple terms, this is exactly where it looks like it's heading to, and then I think it's decision point. I would love to see the 1700 retest. So if the 1700 retest comes in, that makes it a really interesting point for someone like myself that has been sat in cash on ETH and doesn't currently own any ETH spot. Right, that 1700 retest is going to be a really interesting point for me, because I have to make the decision on whether or not that is the higher time frame retest that I can be a part of, or whether or not that's going to be an area I'm going to be scared off bidding. But I think for now, this would be the retest level. Back down to the 1700s would be the retest level that I would be looking for. Extended now on the daily, extended on the 12-hour, diverging the last highs on the 4-hour through here. So we managed to create a nice little divergence between these two highs today. And then we've seen a sell-off to begin with, tapped into the 1900 levels, which is, you know, an untested area that we broke out from when we created the 2K high. And so far, seeing a relatively decent reaction from that. Still feels as though it's more kind of weekend fuckery than a full-on breakdown for something like ETH. So I still think the setup is good to potentially continue attacking the upside and extend further. 2200 would be the ideal area. If this is an overthrow scenario, so for anybody that doesn't kind of understand the overthrow premise, it's where we've been trading in some, you know, really nicely defined kind of channel action, wedge, channel, whatever it might be. It works the same thought process. It's where price breaks to the upside and then quickly falls back inside and then trades usually lower quite quickly. So this overthrow scenario is not too common because we don't have many patterns that actually play out or channels that play out successfully in crypto, but the kind of the overthrow thought process is really there because it fucks up both sets of traders. It causes a lot of chaos in the market whenever there's been an overthrow scenario. Because what's happened is, you know, the traders that are operating here have just been shorting into this. They take profit here, they become buyers here, they sell into this, they short here, right? They buy here. And they just do that the whole way up this pattern. And it's the same with BTC from a channel perspective, right? It's the same process. So those buyers and sellers are just operating in the same manner because we have these predefined, very strong, higher time frame levels that price has just been, you know, bouncing between. Whenever we get one of these overthrow patterns, it tends to fuck things up a little bit because the traders who have been operating in this way can now not operate in the same way because the conditions have changed. We then have the bears who will accept defeat because this, let's say you're looking at this as a wedge. The bears will look at this and they'll say, okay, well, this is a breakout, so I can't short into this, it's too strong. And then you'll also have the bulls who will look at this and they'll say, well, if this pattern failed to break down, this is very, very strong, therefore I'll add to the position here. So a lot of people get kind of caught up in these kind of like smaller moves that escape the boundaries of any channel that we're looking at. It tends to be something that causes indecision, causes people who have had a pretty comfy ride for the past month to now start kind of, you know, being concerned about the way their positions are looking and how they've been able to trade. And if this was a true overthrow scenario, I think we would make our way back down to 1700 pretty rapidly through here. And then, like I said, that's the higher time frame retest. That's the area that I have to consider if I want to be a spot buyer. It's all going to be the interaction around this level. And this level kind of remains the same. It's always been the same discussion point. You know, when people have kind of spoken about, you know, well, where will you be a spot buyer? It's here, but it's always been from the upside. It's always been kind of the retest into this after trading higher. So this is the area that I have to consider whether or not I want spot holdings into ETH. We'll see. We'll see. For now, overextended, 4-hour div. Potential to pull back more aggressively. 1700 is the higher time frame level of interest. 1900 could hold us. If we start to extend on kind of the 12-hour and start producing divergences from the 12-hour up into 2200, then I think that is another de-risking point. And once again, I'm still looking at the 1700. So even if we start trading higher from here, then I'm still looking at this retest as being the area that I want spot exposure. I can still play perps, I can still play futures, so there's no, you know, it's not like I'm completely naked to ETH, but this is the spot exposure level. The hold of this level on the higher time frames is still the level of interest for me, regardless of what happens in this region. What would you see at 1750s to not make you a spot buyer? I think it's not, when I'm talking about buying spot, I don't think I need to be in a rush for it, right? So I would rather see ETH hold over, you know, 2, 3, 4, 5 days above that 1700 level and just slowly buy into it. Because I think I'll probably have plenty of time to do it, but that's what I would like to see happen. Yeah, it will be a scary dip to buy. Yes and no. It's a scary dip to buy because it will probably be relatively aggressive. It's not scary because it's got a very clear invalidation point, right? That's the upside of it. Is that if it loses 1700, then there's no reason to hold spot. That's just the simple rotation point. So I think from that perspective, it's relatively positive. You know, actually, it's a really good invalidation point, and apart from that, you know, it should be pretty comfy. If you had to choose up or down, what do you think is the most likely for ETH? That's pretty tough. I think, you know, gun to head scenario, I would have to bet on down here, continuation lower. But again, you know, I think there's a pretty good shot of this trying to make a push to 21, 22. But gun to head scenario, I would still have to pick lower first. When you say loses at 1700, you mean closing below on the 12 hour? I mean, the daily is probably enough. You know, the daily is probably enough. If it loses 1700, then regain it, do you buy again? Yeah. As long as there's a clear reason to do so, absolutely I would buy again. When people say if it breaks and holds above, what does the holds part mean? More often it just rips past these levels or chops hard. So when we talk about holding, there are like multiple ways that you can do this. You can have criteria over a number of days held above. So if we're kind of, you know, if you're comfortable on ETH and you say, okay, well, if we get a retest in here and we trade here for 5 days, then that would be, you know, I would be happy enough that we were seeing buyers present at this level in order to move into position. The other way that you can look at this is on the slightly lower time frames. And if this breaks into 1700, on most lower time frames, we will have a downtrending structure. So we're going to have a downtrending structure. So the, you know, the chart is going to look like this on the lower time frames into that level. What you can then look at doing is you can look and say, okay, well, when we have a change in this downtrend on the lower time frames, I will be a buyer. So then when the market starts putting in higher highs and the higher low, then you can choose to be a buyer. So there are a couple of ways of doing it. You're either just going to take the daily and you're going to watch and wait and see that we get the bounce from this level. Or you can start diving into the lower time frames and you can start looking at when does the change in market structure happen, considering we are retesting a very important level. If we start breaking to the upside, it should be a pretty good indication that the level is holding. So they're the ways that, you know, I would recommend looking into that. Thoughts on the 2K short on ETH being an overcrowded trade? I mean, I don't know. I don't know why particularly the 2K level would be a crowded trade. I don't know how many people are operating on that. But apart from the 4-hour div earlier, there's nothing really on the higher time frames I would have for shorting this. I think there's a pretty good signal here if you were looking at the markets earlier. It's a 4-hour div here, and I think that was a good enough signal to try and move into position on ETH. Apart from that, don't know. HenQ and SPY will decide the direction. Both look extended. Yeah, I think both are extended. You know, there's they have been relatively aggressive in terms of their upside pushes. 4-hour looks really, really good here on SPX, breaking through everything here. Daily is continuing to push higher. The next zone is 4,300, and then to the 4,390s. It's really this area through here. You've got the resistance here, you've got the untested region here, so you know it's probably going to end up somewhere in this zone. Now whether or not that looks like something that comes up here, does this, plays into a daily divergence, right? We get this, we get this, we get this move, this is the daily div, and then we get this play down. Not necessarily sure this just like turbo reverses from here, but it is hyper extended based on the rally on Friday. Yeah, and now's trading into this level as well. So 13.5 being an important level, and again the level just above it, 13.8, being the untested region. So very similar to SPX in that. Now this is a troll, 100% a troll. Holding XRP, LTC, and BCH, should I keep them? 100% troll. There's no chance. There's absolutely no chance on this fucking planet you're holding those three assets. Either that, or I am truly back in 2017. Okay, let's dive into some of the markets that look worse. Right, so we kind of looked at, you know, BTC potentially with that, you know, super dodgy divergence across the last 3 highs, ETH overextended. We'll look into some of the markets that I think have been clearly a lot weaker than others. So we'll start off with Ape. I think Ape has been a very, very easy short for quite a long period of time, because we had sort of a week where Ape acted as an anomaly to the market and just pushed higher, whereas it's been a very poor performer since. And you can see here you've got the Also oscillator divergence all the way through here. So we've got our 3 lower highs in this region here and our 3 higher highs across this region. So just losing momentum each high that we're creating, this triple drive pattern, and then eventually starts to crumble and break to the downside. So a really decent short setup or hedge here based on if you want long exposure to other alts. I think that this has been one of the better shorts. I think that Link is a particularly attractive downside play just from the same thought process. Maybe you're not going to get as much with this, but you've basically got exactly the same setup here. You've got your divergence here across your highs, you've got your 3 lower peaks here, you've got your 3 higher highs on Link, and you've even got this horrendous 4th one here. This is such a nasty rally and then sell off again here on Link. So we've got nice triple drive here. And then we get this one, which comes in and just nicks the high again. And again, on reduced momentum. So another lower high here and another lower high here. And then reacts pretty aggressively to once again to being above 930s. So this is a position I'm currently in terms of trying to play the short side on Link. And I think taking out these lows, coming back into this important 12-hour level here at the $8. Again, that kind of ties in with the pullback that I would like to see on ETH. Would be ideal. 12-hour divergence as well across the highs through this region. So overall, really good setup. Very simple setup. You've got divergence play, number 1. Number 2, you've got straight into the higher time frame resistance region at 930. And then number 3, you've got a very easy target down here in terms of getting back towards that $8 level, which proved to be a very tricky point previously. Really kind of simple thought process. ETC, I mean, yeah, sweeping highs, reacting again. I don't really like it as a divergence play. I think there's too much consolidation potentially in here. The 3-day, this would be a nice one. This 3-day here would be a really nice one if this locks in. And I think you're probably looking back towards the 25s. That would be a really aggressive sell-off. And again, it just depends on what the conditions look like. It's like, that's where I'd pitch for if I was just eyeballing this and looking at kind of the technical perspective of where I would look for. It's a lot more difficult based on the fact we don't know what the market conditions are going to be like. You know, so it's like saying, you know, we're going to get a 40% pullback in ETC. Might be outrageous because ETH might pull back 10% tops. It might be that ETC is a big reaction on the downside and therefore we do get a far larger sell-off. But this 3-day div would be nice. And then kind of structurally, you know, I think just, you know, maintaining the market structure through here, I think it's a pretty solid confluence for playing into this. It just feels as though it's got a lot running for it. If you were, again, looking for kind of potential hedge exposure, I think that this is, again, one of the nicer higher time frame short setups right against its bearish market structure high. Daily div on Matic. Let's have a look. Yeah, too much, but too much. And I think it's a nice breakout on Matic. And the other problem is that this is a really good example of a divergence that I would find harder to take because other markets have just got clear, like, triple divergences, like Ape did. They've just got very clear triple divergences. Matic doesn't actually have one because Matic has got its high here and it's actually got a lower high here. So in terms of like divergences, this isn't a divergence. It's just following price action. So that makes it a lot harder to play. So in regards to Matic, I think it's just easier to follow this as a clean breakout of this consolidation region than it is to potentially counter this, because again, there's no divergence set up here for me. So this is a really good example of a market that I would really struggle on playing. Well, I wouldn't touch, right? That's a better way of phrasing it. I wouldn't touch this market because there's no valid setup and there's markets that are far better for me to look at. Let's do Sol. So this is the Sol setup I took the other day. And I think scaled out of it really, really well. I think I've done really well in terms of taking profit on this position and then just seeing what the result is going to be from Sol now. Sol is a little bit like BTC in the way that it's channeling through the higher time frames. And so, you know, again, we're just moving in this channel through here. Seem to be meeting resistance every time we're trading above it, and then seem to be finding support every time that we're coming back down to obviously this level through here. The main area is around 52. That's if, you know, ETH does the 2100, 2200 move, then I think that Sol has the potential to make it up towards the 52 region. That would be the area that I would be getting out of this position in full. The setup was a relatively simple one. It was just based around this level in here. Right? So it was just based around this level in here. Trade setup is taken here. So this is just the acknowledgement that this level through here at 4350 had basically just proven to be a key resistance point time and time again over the 12th of August. Right? The 11th and 12th just completely shut down against this level. And also market structure perspective. So when we take a look in here, we can see the market structure, you know, in terms of the low, the high, the lower low. And so what happens here is we get two very important things that happen on this candle. Number one is that we break the highs at 43.50 for the first time and we get through this resistance region. The second thing is we switch the market structure. And we put in that fresh high here. And so this was the signal for entry and then running this up. Took some profit into the 47s through here. And the reason took profit into the 47s was because we'd started taking off the highs here. So the highs of this region here had gone. It was a good opportunity to take profit on the position. I think it's still good as long as it holds 44.85. I think it should be holding this region now. I don't think Sol should be trading below here, basically. In terms of the position itself, this is where we would expect to hold. These are the 2 or 3 former resistance points before the breakout. Right, breakout here, coming back down into that level here. I don't think we should be closing back underneath this level. Yeah, weird how there was no div on Sol on the 1 hour or the 2 hour, but thanks to the 4 hour close, there was a div on the 4. Yeah, through the highs here. Yeah, relatively unusual. Yeah, I don't usually like the catch-up plays, but Lux resembles many other alts just before the breakout. Yeah, would absolutely agree. RSI is positioned very, very similarly. I kind of using ETH as the barometer for this, but Lux is basically doing what ETH was. But the problem that I have with Lux, well, it's not really the problem. It's just like this is a super well-respected trend line. And the problem that we have with this is, like, look at the length in time between the touches. So this is the formation point. Then from formation point, we get a nice healthy gap before we come back down again. And then even here, we get quite a nice gap between touching again. And now we're really starting to speed up the frequency in which we are running into this level. So this is kind of like the horizontal bouncing ball effect, but just when we are with the diagonal. And so, like, I absolutely appreciate the fact that Lux does look like a potential catch-up play. I think if you want that play, you're much safer in waiting until this level here is captured. You know, if that 42 goes and we start to see impulse through here, I think that fine is absolutely a play that you can take. Until then, I would be slightly nervous about sitting in Lux just because, like I said, I think that each of these touches on here is getting a lot tighter. It's happening far more rapidly, and I think eventually this level's going to crumble. It's such a nice line. It's such a great, great level. You know, XTZ had one on the weekly, you know, and it's that classic logic. I mean, this is a fucking great chart anyway on the daily. This is just channeled beyond. It's exactly the same scenario. But XTZ had such a great weekly. And so sometimes, like, these lines that we have, even though diagonals aren't great, I think they're great if they're valid. And, you know, you can see price reacting off them multiple times, and you've got plenty of confluence for any decisions around a diagonal. But I think that Lux is, you know, relatively similar in terms of the validity of the diagonal. I think XTZ is a very good example on the higher time frames, how just a simple diagonal breakdown, you know, basically here at the $3 level, the breakdown came at the 260s, and then, you know, you trade all the way back down to the $1 level on the back of that as well. So super simple. There's a number of alts that just haven't popped off, right? What do you think about OP? I think it's probably the worst scenario it's been in right now. So previously it was doing something relatively decently, which is holding on to the low. So there were two things that happened on OP over here that were of interest, right? Specifically in this cluster here, and we'll dive down into it in a second. We've got our divergence between our highs. We've got a fuck ton of resistance that happened here above the $2 level, and then we started to break down. The 12-hour was holding on nicely to the structure. So really what you don't want to see from an OP is you don't want to see this low here gone. So we don't want to start closing below this 12-hour low. Because structurally, we can still say that this is an uptrend if we manage to move away from this low at 150. Closing below the low is not a good look for it. So we get that market structure shift. We already know that we've got the higher time frame bear divs. Not great. Okay, that's not a good look at all. In terms of what we were doing in that particular cluster of price action was a really nice divergence. So we could see through here the three lows, 1, 2, 3. All right, and the higher lows here on the RSI, the higher lows on the peaks of the awesome oscillator, and it looked like a really good setup into this level. Taps of 50, failure, sell-off. Now it's at an important point, because like I said, I think if that 12-hour or if this daily low goes here, it's a really, really nasty looking chart. Is it a good short? It's a very good question, and I feel as though if I said no, I feel as though I'm falling into the opposite of the Hosaka it's already pumped meme. If it breaks the low, yes, potentially a very good short. Because, you know, what's to stop it coming all the way back down here to the kind of 95 cents level? There's really nothing in the way for it here. You know, maybe a stop off at 115s, but there's really nothing that's, you know, here to support it through this. At the same time, this is already down pretty heavy off the highs, and so for me I would struggle into this, but like I said, I think it's just the reverse logic of the it's already pumped, don't enter it. And I think you can probably just take like it's the already dumped, and you can scare yourself off entering it, but it's probably still a very good setup. Like the questions about Doge and SHIB, like what would you like the answer to be, right? When people are asking, like, can you look at Doge and can you look at SHIB? What do you want the answer to be? Because I can look at a chart, and I'm going to look at a chart that has rallied and is very green, and I'm going to tell you, if you want to buy a dip, buy a dip. That's it. It's the same as any market that's done 30% in a day. If you want to be a buyer, wait for a dip and be a buyer. If you're asking me whether or not I think that your financial future relies on the fact that Doge is and SHIB are pumping in the last 24 hours, and whether or not you need to FOMO into them because you somehow convinced yourself that fucking Dogecoin season is back, that's slightly different. And if you want me to call a short, there's no fucking way. How concerned are you with a full-blown nuke BTC going sub 20k this week? I don't even think I've considered that as an eventuality. Yeah, div here into the highs again on LIDO. Channel looks pretty clean. I would literally just be like channeling this. I would just be like, okay, here's the channel. Right, boundaries are here. Boundaries have been here. Just wait for it to trade back down here if you want to be a buyer. If it breaks through this, loses it on momentum, game over. Apart from that, you're looking for the bottom of the channel again. I wouldn't overthink this. It's like a channel play. You can see it's a channel play. The clear reaction from the channel every single time that we tap this level. You literally just have to hang on for like 16 hours in a long position here, and you literally have to hold on for 4 hours in a long position here, and it fucking rips. It is practically 2xing just for having to hold along for 4 hours through here. I think realistically, I think that people should probably be more concerned by the fact that like Doge and SHIB are pumping today. It was a real shitcoin day today. A real shitcoin day. Some real garbage went off today. And that's a concern for me. Whenever typically we've had these kind of, you know, the real bottom of the barrel shit has started popping off, it's never usually a good sign. It could be indicative of retail return to the space. Not a chance. Not a chance. I tell you what's more likely. What's more likely is your grandma logs into Twitter. She sees everybody talking about SHIB. She decides that now is the time to re-enter the crypto space. She's had a really tough last 3-4 months, but she thinks today, given that everybody's talking about SHIB again, that now is the time to get back into the market. So she takes her last $200, she market buys SHIB, 30% up on the day, she market buys, and in 1 week's time, when SHIB is down 90% from here, she got to turn around again and be like, crypto was a fucking scam all along. I can't believe they got me one last time. I thought I was done with this. I thought I was clean. The addiction was gone. And they pulled me back in for one last time. And this has happened. That's what's going to happen. That's the retail journey through this. Retail will look at SHIB and they'll say it's happening again. It's been long enough where I don't feel scarred. Ether's up. Market feels a little bit better. Some of my friends are talking about buying again. Oh shit, now dog coins are up again 30%. I'll move back into the market. Week later, though, it will be gone. It's over. That's exactly the way it's going to work. Like, there's been a long enough time for retail to feel less affected. Do I think that retail is forcing this move? No. I don't think it's the fact that, you know, we have millions of retail traders suddenly again just because these coins are up on the day. I think actually it's more concerning that retail could just get drawn in by these dog coin pumps and then be like, okay, let's give it one last shot. CRV is the best chart that I have, which I think gives an indication of how I think the rest of 2022 will play out. CRV is the best looking chart basically for that thought process. So you can take the 3-day, you can take the daily, whatever. We'll take the daily. The levels are slightly scuffed, but we can sort that out quite quickly. I think the rest of 2022 is a range as a whole. I don't think we turbo the upside. I don't necessarily think that we turbo the downside and make fresh lows. However, I think that CRV is a very good indication of what the rest of 2022 will look like for most alts. Nice highs here, tapping into the top of the range. Nice low creation here. I think potentially again, you know, sell off back down to the $1 level, maybe bounce around here for a bit, dip back down, visit the bottom of the range, back up. I think CRV just looks as though it has really nice kind of mapping for the way that we may run for the rest of the year. And I think you can pull this chart to mainly anything. You know, when we talked about this, I think when I streamed last, you've got the BTC and the Sol channels, and they're just doing this. And I think when they break down, we're just gonna resume like this. And then people get rid of the channels, they'll draw the horizontals, and we'll say, okay, it's a big range. So, like, this is the way that I think it's going to go. And I think, you know, I think we're either here or I think we're here. Like, that's basically where I think we are. But this is still the scenario I think that will happen. And I think CRV, as I said, is a very good indication of that. And again, you've got your boundaries up here. And if we start to break down, I think it's just a range. I just think that CRV is a really good indication of that. I think people are like super horny that maybe the bull run could be around the corner. The lows are in. But even saying the lows are in doesn't mean that it's now a bull run. We can just go sideways. You can just hit the next 6 months and go sideways, and you'll just chop yourself to death and lose all your money before a bull run begins anyway. Yeah. I know about the diagonal and atom from underneath, right? Yeah, again, it's just channeled, right? Tight channel, top of the range here. We could say this is the top. Here. Give this as the low. Here. We'll eventually break down from the channel. Again, whether or not we're kind of at this point where we're going to do this. And then we'll break down from the channel. And then it's just range. You know, this is basically what I think it is. And yeah, you're exactly right, THETA. That is exactly how I would look at this. But I think that so many of these markets are basically up against where the highs would be. You saw Link as well when we discussed that earlier around that 930 level. It's the same. And this move here has been relatively controlled. It's been a pain for many people to trade. It's been quite difficult to stay in long positions. But, you know, I really think that this is probably, you know, range formation. You know, if we fast forwarded to the new year, I think we're probably still caught somewhere within these boundaries on the majority of alts. You know, I think these sort of boundaries will be established, and we'll be, you know, we're probably trading around like 920. Yeah, and that will fuck a lot of people. Not only do they have to deal with the fact that there is no bull market, they have to deal with the fact that they got chopped up all the way through here and probably didn't play nicely. Now they've got to deal with the fact that price is selling off, and then they've got to deal with the fact that it's going to be boring as shit because we're just going to be range bound for the next 6 months. Horrible combination of factors. Yeah, it's a trader's market. Yeah, it would be an aggressive trader's market. Yeah, and again, you're right. 12-hour divergences on the awesome oscillator here, 3 lower highs on the RSI in a horrible place up against the potential range highs, and I've still got to leave it as that for now because there is no true confirmation of a range here. We're just running into the original resistance region around the 1230s. It just looks like all of this just looks so like fucking primed to eventually get down towards at some point. It's literally like no low that's been even remotely run down to. Now, there are some markets, again, that are different. So, like, THETA is different because THETA has broken out of its level. Right, so it's broken out. It's clear. This is the resistance, around 150. And we're just consolidating on top of that area. So you can see it clearer on the daily. This is the consolidation region. 3 months of consolidation through here. Big breakout. And now we're sitting on top. So something like this, you've very clearly got your triggers. This is one of the best points that the chart can possibly be at because you've got triggers both ways. If we're still holding up here, then you want to be looking at taking long positions, and then you're aiming for the resistance here at $2. If we break back down inside the range, then you're shorting this, and then you're aiming for the range lows down here. It's super simple. This is one of the best positions that we can be at. In terms of risk reward here, you are at a beautiful point of the chart. And then you've got other charts like Uni. Super simple charts. Play a breakout, done. Easy 10% trade. 12-hour time frame, wait for a 12-hour close above this level, take the trade. For anybody that hasn't looked at a Uni chart in a while, just load up the 12-hour, stick this line on it, wait for a 12-hour close above this, and then play the upside. It's one of the simplest levels on any chart right now. And again, if you're thinking in terms of risk reward, you're short into here, you're long on here. But it's such a clean level. It's such an easy higher time frame level to play. It's very similar to Matic. Right, so when you get the Matic breakout and it just pops 10% in a day, you want an easy 10%, you take this trade. You take this trade when it closes above this level, and it probably gives you an easy 10% move. You don't fuck around with it. Once it gets higher than your sort of 10% region, you have your stop loss nice and tight underneath the impulse candle, and you can go. But you won't find a cleaner level on a chart than this. ENS is another one that's broken out of the bottom and has come back down into this kind of really important level around 13. We did make a divergence on the highs. So we did make a bear div on the last highs towards 18. Back to the 50 level. Concern with this is we still have the div. Has the div played out? Potentially. What about if ETH dips lower? What about if ETH heads, 10-15% lower down towards 1700? 13 needs to hold on the higher time frame perspective. That's what you're looking for. If you get a 3-day chart and you pull this back down to the 50 level down here and it holds this retest, then that's the buy zone. Sand. So everybody knows about the sand unlock. We've got the 3-day RSI at the 50 3-day RSI at the 50 level here, so it's looking pretty rough in terms of rejection. Sand has shown absolutely zero impulse in trying to get through this level here at 135. If we just zoom in on this level on 135s, there's zero impulse to get out of here. This has been since mid-July. We've just been selling off above 135. Every single time. This cluster in here. If you want to take the sand trade, you're waiting for impulse to the upside that breaks this. Just look at this. You can just see the kind of the way that this is contracting here. It's getting tighter and tighter and tighter. So we're expecting a break. If you want the upside break, obviously you need to see a very strong candle that's moving towards the 145s. There's been plenty of consolidation under here, but I think that this market can still go either way, depending on what happens. Obviously wider afield, but this has just been super tight, and it's just contracting tighter and tighter and tighter in here. And now we're expecting, you know, impulse one way or the other. But I mean, again, if you had a gun to my head and said pick your position on sand, you have to short this. You have to short this every single time in this setup. With this resistance continuing to act the same way as it has done for over a month, with the RSI in the position that it has been, with the little shitty, weak, pathetic, awesome oscillator cross here, you have to take the short side. And if you want to play upside, then you're waiting for a very clear breakout candle above this 135. Yeah, looks like the uni level. Yeah, just slightly higher time frame, so harder to play. Does it seem like more people are hanging around this bear market than 2018? I guess so, but we just have more participants. Right? There's just more people in general fucking around in crypto, and a lot of people have kind of got a bit of an addiction problem now. So I think we've just got larger participation, and now we have more addicts. I don't think there's necessarily like more volatility. I mean, like, yeah, we've been volatile, and intraday we certainly, in terms of like the ranges, yes. But like, you know, what if it's April 2018? You know, what if that's where it is? What if we're here doing this rally, and then the volatility dries up afterwards? So I think that would only be the kind of concern if this is where we are in terms of the rally strength, 130% upside, you know, and then we're obviously doing pretty decently over here as well. Yeah, so I just mean like in terms of like the volatility, yeah, sure, but in 2018, it just depending on when you were looking at that, right? The volatility died off in the latter portion of, you know, kind of Q4 2018 is where we died off. But actually, we still remain pretty damn volatile for, you know, sort of the first 6 months. So, can I post this? And how many people am I going to piss off if I start posting this? Is this just like great bait? Here we go. Let's do the bait tweet here. What do we got? Let's see how many people we can piss off on Twitter. Take it to the lows, yeah, because then people are going to start calling out it's inaccurate, you know, all of this shit. We've got to make it look pretty much identical. We'll see how many longs we can force to close. There we go. That's the one. Oh Lord, that's the one. There we go. This is how you create the perfect bait. Just grab the bars pattern, just randomly stick it towards some target. You know, like the 500s. Oh, wait a second. We'll add a little bit more to it. We'll do some influencer 101 here. We'll put the level in here down at like the 500s, such an important level. And we just expand this out a little, just like little tap on there, bam, there we go. Little tap on that important level. Done. There we go. You've just seen how to craft the perfect influencer bait tweet. Find a couple of pieces of PA, looks the same, really nasty result. Grab a bars pattern, draw a level, just about touch it here. I'm not even going to include anything, right? We're just gonna tweet the image. The chart tells you everything, right? It tells you everything. This is absolutely the stuff that Wall Street didn't want us to know. 340. This is where the merge goes horribly wrong. Yeah, we won't do the RSI confluence. That's another important influencer point. It kind of like dirties the chart a little. This is super simple. This is the sort of chart that you look at and you think, shit, somebody with 160,000 followers just said that ETH's going to 300. I should probably close my longs. This is the primo clarity chart you need. All right. I mean, that was good. But anyway, that was mainly the discussion on the volatility of 2018. Right, and so just that it dried up later on. Not necessarily that the fucking bounces were the same, exactly the same in terms of percentages from the lows to the highs. Someone who's bearish just shared this tweet. Oh Christ! They're gonna be using me as the example now. When ETH rips to like 3K and the merge is just a super success, they're gonna be that's when it's gonna get retweeted. Yeah, they'll be shitting on you 100%. Yeah, and little did they know that we created this this chart in like 2.5 minutes to show the power of the influenzas. Yeah, SHIB running it back. Yeah, well, let's look at SHIB, because I think SHIB lower time frame was also indicating that it probably could attempt to do that. Yeah, you see through the highs here. So it's great. You've got the divergences, but you're basically looking at kind of the triple drive structure here. So you'd want to see another high into this and another div. That would be the ideal scenario if you're looking at getting short on SHIB. Aside from that, just dip by lower time frame. The percentages are huge to the upside. So if you're looking for the easier trades, you're just looking for the upside plays time and time again. Let's go lower time frame BTC. We'll see whether or not we're just going to end up like sweeping the lows. Where did futures close? 21,275. Yeah. TRX. Yeah, I think we crossed the 12-hour level, but we had a horrendous reaction from it, right? So the 12-hour level is through here. It's the sevens. It's again just been the highs across this entire region. You just stick a line across here. So being above that is a really good sign. Holding above it, even better. 12-hour looks fine. Can make a pretty good case to try and long this. Justin Coin, always a good long in terms of, when he gets ramped up, and given, the kind of the AAVE block, he's probably in a pretty aggro mood. The daily looks hideous. The 3-day looks pretty rough. The weekly looks awful in terms of the consolidation here with the RSI. Weekly structure looks very, very good. Still holding the low. Huge dip down below this level, down to the 4s, already up big from that. Starts to impulse and break clear of this, probably the lower time frame play. If we start getting back up here, we can see the highs here. This is actually really, really clean on the hourly too. Like somewhere around this region here. I think this is really good on the hourly in terms of like diving down. We can see like all of the selling that's taken place underneath this level, and even like the little retest here after falling back below it. So I think if we're probably trading above here on the hourly, you can make an attempt on this on the 12-hour and pray for impulse to the upside. But better markets, cleaner markets, Tron is still a pretty hard one to try and position for. When it takes off, it probably does like fucking 30% in a day. It's just one of those coins, you watch and watch and watch, and then the one day you actually decide to go outside and try and enjoy summer, it pumps 30%. I still just think the market is just going to end up ranging. I just think it's going to be a range-bound market. I think this is just kind of high number 2. And then see you back down at mid, see you back down towards the lows over the course of the next 6 months. I just think everyone's so hyped up about bull market or new lows. And I think the reality is that neither happen. Which would make sense, right? Yeah, you asked about DOT. We'll, just messy chart. I don't like the divs at all. I just hate the divergences here. So the last 2 high divergences, and then this lower high, and then the potential like low here. I'm just not a big fan of like buying into this. Again, DOT would also be one of those markets that, probably in 12 months time, no one's going to ask about this again. We just delete it from the watch list altogether. I would just struggle to get into this. AAVE. It still looks pretty clean, right? As long as it holds 106. Long short level. Long above, short below. CRV argument for the range creation here. You've got the lows from this side as well here at the kind of 115s. Here, into the resistance point, into the next resistance point. Maybe 102s if you want a little bit lower, but then we start to get a little bit kind of dodgier in terms of the diagonal. Ugh. I would just use this level. Honestly, I would just use this level here. I would just flip on this level. You know that the high is over here, and you know that this is the potential resistance point. It's the former low. It's already tapped this level once. It's run its way all the way back up to this 115. You got a really great level on the 4 hour. I would just be long into this level and then short below it. I know you've spoken about journaling before, but could you speak about what someone should be including and what they shouldn't be including? What they should be including is the reason for taking the trade, you know, like what kind of part of the system it fits into, the results of the trade, and then you should obviously be doing your analysis of the trade. So you should be looking at, you know, why was it successful? Why was it unsuccessful? Were there any other factors that you needed to consider? Did you not have the correct take profit levels? Was your stop too tight, etc.? So kind of the detailed analysis of what happened to the position, along with the results, along with any kind of standout points. So that could be things like, for example, when I was doing my early journaling, it was things like getting stopped out on divergence setups before it made a third leg higher, and therefore that being a problem with my trading. And then also, I think one important thing to include in journals is your emotions at the time. So I think it's a really important part to include in your journaling is, what are your emotions like? And that can be whether or not kind of like your personal life is good. That can also be things like, are you tired? Are you trading late at night? Are you trading first thing in the morning? You know, kind of a deeper dive into the other aspects of trading, the kind of more mind-related stuff. That's great. Can you look at Sushi Swap? I don't think I've ever heard anybody refer to it as a full title. But yeah, of course I will, just from the fact that you have done that. It's just basically the uni play. You want to see a clear break of 160s. Higher time frame, momentum dropping across all the highs. And it does sneak a high as well. So yeah, just like the awesome oscillator just showing the weakness in each high that's created in this region. Relatively poor setup, I would say, unless you like the short side, in which case pretty attractive setup. What altcoins, if everything holds steady? I think Sol is good. I think Theta is very good. I think Uni, if it breaks the 12-hour level. I don't think I would touch OP based on current. SNX, ENS, I think you can still make pretty good cases for, given the fact that they've broken out of their major resistance regions as well. So basically anything that is, the top of the list is going to be anything that is broken through the daily resistances, whereas you've got things like AAVE, CRV, Atom, etc. that are all up against their resistances. Sand, the metaverse stuff. Anything that is sitting above its resistance would be the better. The best market. I haven't looked at AVAX in a while. Yeah, we took a look at AVAX shortly, I know, maybe like 15 minutes ago, maybe not even that. Just said that the highs are weakening again. It's just in line with the majority of markets, that across the board we're kind of split. Some markets up against higher time frame resistance, some markets in those really attractive channels and are also up against higher time frame resistance. Some markets just declining in momentum and looking really, really poor, like Sushi. Some markets looking great, like ETH. If we just wanted one trade, Sol or Theta or another, like I think that Theta holding the level is probably the better alt setup. Plus, it's one of those stupid alts that just tends to go crazy. Like for me, this is still the better setup. 3-month consolidation, consolidating on top. And if it starts to move, then can I get this as a music NFT? Soon. Ooh, BNB, good shout. That is a super interesting chart because of the strength. But again, it's the CRV discussion. It's the fact that it's just potential range bound, head back down to the 270s. Maybe we see a tighter range. Maybe we see this kind of midpoint just operate as the as the level. So maybe we just go between here for a while. Dip down, back up here, down here. Whatever it might look like. But yeah, right up against the resistance again. I'm going to assume there's some divergences here. I could be completely incorrect in that thought process. Yeah, last high here. Pretty nasty. Start breaking through this region. I think we get pretty quickly into the 290s. I would just like it to... I'm just going to keep on referring to things as the CRV environment when I'm talking about this kind of, you know, range-bound thought process. Yeah, again, BNB never broke down in terms of the weekly. It's the same as Tron. And same as FTT. 3 markets that never broke weekly lows. Doesn't mean that we aren't going to have a range-bound environment for it. Alright, prediction is up. Good stuff. So this is the prediction for the first 1 minute candle of the Nasdaq at 11 o'clock when the market opens. Pretty simple premise. You think it's going to close red or you think it's going to close green? Obviously in my color palette, but up or down. It's been a long time actually, because a lot of people got cursed. A lot of people. It's been a long time since the stream, right? So there's probably been some pretty poor performances and multiple liquidations. People having a really bad time waiting for the moment to roll back around to undo. Week and a half curse. Longer. It's been 2 weeks since we didn't do one in the midweek. Can't do it then. So 2-week curse. If you get the answer wrong, basically you're fucked. And that's what it boils down to. If you get the answer wrong, you're fucked. You have 1 minute candle in order to define your trading week. It's either good or bad. All based on the answer you give to the 1 minute open of the Nasdaq. People going heavy red. Yeah. UB, do I go for the back-to-back all-in win? 100%. 100%. More green voters though. Interesting. We got the size on red. 115. Yeah, you're right. My dad works at Nasdaq. He said the first minute green. I trust that. I believe that wholeheartedly. Bulls stingy on the precious channel points. All in green due to the chatter's dad working there and saying the candle will be green. The logic checks out. First be massively green until the last 3 seconds. 138 green votes. 482,000 channel points. 117 red votes. 502k channel points. So more people saying green, more money on red. All right, good luck. Congratulations. Bears. You put your money where your mouth was, and you've come out on top. Easy win. I was obviously red. It was obvious to me it was going to be a red open. No curse for me. No curse for any of my fellow bears. Always right. The streak continues. Congratulations. So we will round up there. A big thank you to everybody for joining me. I really, really appreciate it. Nice to be back. A couple of weeks off. Back to the regular scheduled programming from here on out. So big thank you for joining me on stream number 1. Thank you for the enjoyment, the laughs, the fun, and also for allowing me to get back into the charts and take a look at what's actually going on after a period of time of not looking at much. So I appreciate that as well. Thank you for keeping company during my market review, not just me providing that to you. I'll be back midweek. I don't know what day it will be. Oh, it's probably going to be Wednesday. I think that's probably the clearest day. So probably Wednesday midweek, kind of US Open time. I'll come back on for a couple of hours. We'll see how the week opens. I hope you all had a wonderful weekend. Once again, thank you for joining me. You're always very kind to me. And thank you for the subs and all of the follows as well. Enjoy the start to the week, whatever you're up to, and may your P&L be beautifully green. And I'll see you all midweek.